Hey traders, welcome to Charts and Coffee, non-farm payroll edition. Hope everyone's doing well. We are taking a look at a rather dramatic reaction to NFP. So the common question is, what happened? What's going on? Pretty simple. If we break down every hot zone, every scheduled high volatility, high volume event into two realities. One, it's a hot zone, especially when it's going to affect jobs and or inflation. That's going to move not only the broader averages, but more importantly, the linchpin is it moving the expectation for target rate probabilities? We'll get into that. The second part of it is we have absolutely no idea what it's going to do, right? We know when it's going to happen. We know what the data is all about. We have no idea what it's going to do. So my recommendation for any kind of hot zone, any kind of scheduled economic data release, this is non-farm, PCE, CPI, ISM, earnings. Earnings are a type of hot zone. We do not pre-position, right? We do not pre-position into a low probability environment. You might say, well, why is it low probability? Because unless you have a trend, there's no likely expectation for follow through. So you might say, but Rog, what if we have a trend? Well, again, I think especially during these shows, the most important thing I can do is talk my book. So on, what was it, Tuesday. And by the way, I thought I'd use some TradingView. I have not used this in forever. I have it up all the time. It's my preferred platform for alerts. I love this platform on this thing, which I got to mute. On the iPhone, the app is fantastic because I can run my charts exactly how they look on my screen. I can run my HPMRs, my DPMRs, my custom slow stow, etc. So one of the things we did is we took advantage of a move to the upside on the 1 hour chart of Amazon. So the first thing I want to mention is, as difficult as this week has been, and I'm only talking again, my book, relative to August and September, this has been a really difficult this has been a really difficult week relative to those, right? Catastrophic? No, because we keep stop loss, position sizing, risk management at the forefront of our mind. And so it's never catastrophic, but it's not been as fruitful as previous weeks, as the previous 8 weeks. So that's number one. But number two, the really exciting thing is swings are back. Swings are back. So the only position that I was in, that we were pre-positioned in front of non-farm was a short in Chevron. So ultimately, what we want to remember, let's see here, is if we're going to be looking at overall movement, this is a really cool look at Apple, Microsoft, Meta, Google, Amazon, Tesla. Why this group? Why this group? These are the high concentration weighted stocks, right? These are the stocks that have the most to say about what the symbols that we're going to trade most often, NASDAQ, S&P, Dow, Russell, are going to do, right? This is the smallest piece of index sector stock. All right. Now, the other thing I can do, I'll do this with y'all right now. There we go. I can also multi-chart out the sectors, right? So this is the middle of index sector stock. There we go. So this is the middle of index sector stock. And I'm looking at Dow, Russell. Now, after NASDAQ, Dow, Russell, S&P, notice what we have here, XLK, CY, all the things that you all are used to me talking about here in Charts and Coffee, and all the things that I talk about consistently in Top Tier Outlook, because this is what matters, right? How these are all aligned. Look at the XLE, right? And if I think about what's been happening as of late, let me get this out of the way here. When I think about what's been happening as of late in some of these names that we've been looking at, You take a look at the trend on the 1 hour. So if you're wondering, Rog, which time frame are you talking about when it comes to 1 hour trends and overnight exposure, aka swings? I'm talking specifically about the 1 hour time frame and using the daily price movement range on it. So if crude oil is looking like this, it would make sense if the alignment then goes to XLE, right? Trickling lower. And then lastly, right, just again, what's the position we're going into? Taking advantage of this move. So this is the CBX trade. So again, talk my book. Talk my book, meaning what is the only thing that we're in going into NFP? This is it. So do I recommend pre-positioning in front of hot zones? Not usually, right? Not usually. But if I have a longer term time frame, I can absorb some of the volatility that is, right, that we're going to see on, say, a 5-minute time frame. And by the way, those of you that have been reading Top Tier Outlook know we have three, but two really, really bearish indices. And you know what bearish then means? Does it have to be a red trend? Red trend plus. We're south of the 200 propulsion. That is Dow. That is Russell. So if you're wondering, Rog, is it time to short tech? No. Don't try to pick the strongest of the indices or the strongest of the sectors or the strongest of the stocks. For whatever reason, traders like to go toe-to-toe with the strength and go, this stock's gone too high. How about we find something that's already struggling? And when we start to see the rollover, we take advantage of that move. We find something that's already starting to struggle. And when the market really does start to, meaning the market, the four indices start to really struggle with traction, go find the thing that's already weak and short it, right? That's relative performance. And hang on one second, I'm going to adjust my camera here. There we go. So that's the way we want to tackle that. All right. As always, gang, phone lines are open for your questions. So yes, going into NFP, we might take a look at some day trades. We'll see what organizes. I've already got my morning prompts out there for our Sector Secrets Mastery folks and how we may, or frankly may not, trade the morning. And we will go through our sentiment reads. We will always go through our sentiment reads. What are main staples? What are the sentiment reads? What are the multi-trend readings? In other words, what's the structure of the 5-minute time frame, the one that we're going to trade for the day trades? And lastly, what are the relative outperforming sectors or index sectors and stocks? And at that point, we can go through the process of what has the best chance of moving higher relative to everything else, and what has the best chance of moving lower, again, relative to everything else. All right, so let's get to our questions. We've got our essentials folks in the house. All right, good to see everyone. All right, let's see. Alex says, kicking off the morning, what do I do when NFP slams through an hourly price movement range? So number one, I'm not trading non-farm for all the reasons that I mentioned before. All right, that's number one. We always wait till after the move anyway, right? So if I'm looking at non-farm and the whole plan is to wait for some sort of move in the wake of the hot zone, I'm not even thinking about putting on a trade until quite literally 8:30 and 10 seconds, right? It's got to be past the data. Number one, if I'm going to do it. This week I chose not to because the volatility has been far, I believe, more predictable and shifting quicker than previous weeks. So I chose not to do anything with non-farm. I am flat as a pancake. So then the next thing I want to look at is what was the structure in front of non-farm. Now we were really starting to go bearish momentum, and obviously by 8:30 we started to go flashing, right? Trying to wobble to a downtrend, which is exactly what we're going to inherit on the open. I think another cool thing to look at in front of non-farm, and I'm going to make that adjustment right now. It's a manual adjustment. What was the previous session close, right? What was the previous session close? But as far as the basic question is, what happens when price moves through the HPMR? My friend, on non-farm, I would absolutely expect it to. And you might say, Rod, you're expecting price to go through your hourly price movement range? Yes. Here's why. Because ultimately, when I have a green and red zone, right? And number one, notice that these things are flipped. I have a super high volatility event coming on the heels of what's already been a very high volatility week. That's why I didn't choose. So my Sector Secrets Mastery folks are saying, Rob, we have a bonus session almost every Friday to trade this thing. And we do well about 65 to 70% of the time. Why not trade it? We did not have an edge this week, right? And obviously you can see, not only do we slam through it, it flipped. The green is above the red. Support volatility levels are above resistance. This is what 32% probability looks like. In other words, there's no 100% probability, right? I look at 68% of the time, hourly price movement ranges will hold 68% of the time. And 32% of the time, which we can know for the most part when they're going to be, the 32% is going to accompany major macroeconomic data releases. So are we surprised to see this level of volatility in that rare air 32% window? Not at all. And especially on a week like this, where it's already been bonkers. So that's the answer to that. That's why I did not trade it. And that's where, we call these caution days. Why? Anytime, gang, macroeconomics is not this word, that's multisyllabic word that means nothing. In fact, it means something very specific. Macroeconomics would basically be the rate of change, aka the trend, of two main data pieces of data, the ones that the Federal Reserve looks at the most. Number one is inflation. Number two is jobs. Why those two? Because the U.S. central bank has a dual mandate, meaning those are two things that they are responsible for. Their monetary policy is meant to map to improving those two things to their targets. That means any inflation piece of data, in order, the PCE, the CPI, and the ISM, in order. And when it comes to jobs, I would say top of it is non-farm. I would follow that with JOLTS, and then lastly, the weekly claims, right? In that order. And when those data pieces come out, it's going to move expectations for what the Fed's going to do. And that in turn is going to move what's happening in treasuries, what's happening in the indices, what's happening in the currencies, right? We look at the trend shift based on the data of those 6 hot zones of those two main macroeconomic pillars. It's not difficult. We just have to remember there are certain events that are going to create a lot more volatility than not. Okay. So again, remember, 32% of the time, there's going to be movement beyond the 68% probability that we have built the hourly price movement ranges upon. 32% of the time. Are these 32% of the time events, days, hours unknown? No, they're going to accompany those 6 things, right? So as long as we remember that, this is a potential fireworks kind of day. Anytime Powell opens his mouth, right? FOMC meetings and pressers and minutes would be part of that as well. I mean, obviously that's the source. Macroeconomics is the Federal Reserve. What they say, what they do, that's macro. But what maps to what are they going to say and what are they going to do? That's those 6 pieces of data. We're getting probably the most, I would say PCE and NFP are your biggest. We're getting one of the 2 largest macro data dumps today. So absolutely, are we going to move beyond potentially the 68% probability? No doubt. And again, the reason for the uncertainty is, is it going to be better or worse than expected? So better would be above or below the consensus, right? And then you can look at the 4-week average of the last 4 NFPs, right? Or 4-month average for kind of a rolling 4 data release. So the previous was 277. The consensus was 170. We pinged at 336. Is that better than expected? Or is that AKA good? Yes. And good data does what? Good is bearish to equities. There's how this works out. And there's where, look, gang, trading non-farm is not for the faint of heart, nor for folks who are not prepared for that 32%. And why did I not trade NFP? I think this is the first month we haven't traded NFP in probably 3 or 4 months. Why this month? Look at the volatility this week, gang. Market doesn't know which way's up. right? So now you throw some kerosene on an already confused environment, and this is what you get. So I'm trying to point the clues. I don't want to be a pebble in the shoe, gang. Definitely, and definitely not salt in a wound. Um, what are the clues that lead up to this NFP? Could be raucous, right? Could be chaos. That's how I look at it. All right. Okay. So thank you so much for that. Next up is my thoughts on natty gas. Sure. So there's a couple ways, actually, there's a few ways to look at natty. My preferred way has generally been this year FCG. So what in the natty gas universe has already been moving higher? For the most part, if you look at the whole year, it's been mostly bullish since mid-July in natty gas company stocks. Natty itself has been a choppy mess, and just today, going into today, is the first glimpse of two very important transitions on this chart. Everyone can see this. It's visual, simple. See that little glimpse of green in the bottom right-hand corner there? That is the multi-trend trend, right? That's our multi-trend reading. The top row is the multi-momo. What is momentum doing? That's the top row. What is the trend doing? That's the bottom row. And if you take a look, not only are we trying to go green for the first time in seems 7.2 years, we're also getting above the 200 propulsion, the white dots. That is a significant shift in what we could see going forward in natty. So natty could be very interesting next week. Not yet though, but you could shorten the time frame, right? Could I start to swing trade NG, or could I start to swing trade UNG? I would say UNG because it's easier to scale into relatively affordable call options on UNG as opposed to the risk and leverage and cost of an overnight exposure in natty gas futures. By the way, I can't remember what natty gas. I'm going to tell you all right now because it escapes me what the initial margin requirement is in natty. I don't think it's super high, but it's high enough where it will make most traders pause. It's about $7,100, $7,100 per contract versus I could get into a number of UNG options, right? Okay. Does the pre-market candle reaction from non-farm payroll have significance for sentiment? D. Bolton, I would just jump over sentiment and just say, hey, we're in a downtrend, right? We're in a downtrend on the averages. So before I even say, where are we in terms of sentiment reads, whether that be the previous session close, whether that be our 5-minute Pingala, whether that be, red grab candles, I look at 8:30 to now, and we are red multi-trend. So that would eclipse everything. In a game of rock, paper, scissors, right? Multi-trend wins every time. Okay, so that is what we're going to be waking up with. See, Jim asks, if I'm understanding right, am I expecting the indices to fade lower today, or at least at the open? Jim, I never try to project. All I'm going to say is I have a downtrend, and I would expect it to follow through. Yes, but I would look at a couple of things. One, there are two segments of the morning that are really important. The first 5 minutes, Jim, 9:30 to 9:35, will set up a sentiment read. And 9:30 to 10 o'clock will set up another sentiment read. But if the structure of the market remains red, I will continue to look for short positions. That's the way I look at it. That's the way I would answer your question. What I expect, I try not to expect anything, Jim, right? What I try to say is what is happening now and what does that allow me to do with the highest degree of probability? That's what I ask myself. So right now, to start off the morning in indices, I'm only allowed on all of them. I'm only allowed on all of them to look to the short side because I believe all four are red trend. So Jim, I hope that helps. All right. Very, very cool. Okay. So that is the plan, gang. And then the rest of the time, we're going to be looking at some swings. Swings are back, right? It looks like we're going to have a pretty decent swing morning. I think CVX is bouncing a little bit here on the morning, but for the most part, swings are back. We should be able to get a decent either break even or more aggressive optional target on CVX this morning. We had a nice winner on Amazon, so should be two for two on the swings this week. And that means that there's a style that we haven't been able to deploy in a very long time that is coming back into focus as we go into deeper into Q4. Very exciting to have that time frame and that time horizon back in play. All right, gang. As always, thanks as always for being here for Charts and Coffee. I'll see you on Sunday for the Top Tier Outlook show. Be careful today. Lots of drama unfolding. And I will see you all in the mastery in just a few moments. All right, gang. Be good to each other. I'll talk with you soon.